With multifamily real estate, there's two types of multifamily real estate. There's residential multifamily real estate, which is your 2 to 4 unit properties. Those are your duplexes, your triplexes, and your quads, right? Then there's commercial multifamily. That's anything that's multifamily 5 or more units. So that's your 5-unit property. That's your 50-unit property. It's your 100-unit property, your 300-unit property, or your 1,000+ unit property. The properties that I focus my attention and energy on are 100+ unit properties. So under the commercial and residential multifamily unit properties, there's 4 types of properties. There's a Class A property, there's a Class B property, a Class C property, and a Class D property. Now, what is a Class A property? These are going to be your brand new properties. They're going to be upscale, luxury apartments. They were built within the last 10 years. They're high-rise product. They command the highest rents in the submarket, right? They usually have the highest valuations per door in that area. They're going to have all the interior and the exterior is going to be brand new and renovated. You're going to have pools. You're going to have high-quality construction, high-quality materials. Mostly white-collar workers are going to rent in these buildings, right? And then the national average for cap rates are going to be 4.89%. Now your Class B properties, that's going to be your properties that are a little bit older, right? So that's anything that's 10 or 25 years old, right? They're going to be well-maintained properties, have a middle-class tenant base. They're going to have some updates to the exterior and interior. They're definitely going to be quality construction, and they're going to rent for a little bit less than the Class A product. And your cap rate on that Class B multifamily is going to be right around 5.26%. Now your Class C multifamily property is going to be a much older product, right? You're going to be 30 to 40 years old. The renovations are not really going to be there. You know, it's going to be full of like blue collar and low to moderate income tenants, right? The majority of the appliances are going to be the original appliances for the property. They might have a dated exterior and interior look to the units, right? The rents are going to be below market average, right? So like if the market can command $1,000 rent, like the Class A type property is going to get $1,000, right? Then your Class B type property might get between $900 and $800, right? And then your Class C is going to be, $600, $700. So you're not going to have as high of a rent as the Class A or the Class B, but these are still where there's a lot of value to be created, right? This is between the Class B and the Class C product is where I like to focus a lot of my energy at, because I can buy a Class C product, right, and do some renovations, do some construction, and then I can make it look similar to a Class B product from an interior renovation standpoint. Then you have your Class D properties. Dum, 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 dum. So these are your Class D properties. These are your older properties, 40 years old, right? They're going to be minimal to no amenities, low construction quality, right? So these things are going to have issues. They're going to have problems, right? There's going to be a lot of really low-income tenants are going to live here. They're going to be worn. The operations are going to be not efficient, right? They're going to be located in generally like lower socioeconomic areas. Now, I've seen a lot of people buy these lower Class D properties in up and coming areas, right? And really turn them around and provide a lot of value for the tenants. A lot of these tenants have been there 20, 30 years, and they've dealt with a lot of stuff, a lot of crap, right? And then, the multifamily investors, when that area is really starting to pop and turn a little bit, right? And get some different tenants in there. These investors will buy these properties and start to clean the property up, start spending some money on the property, start renovating the property, and start turning that property from a D-type property to like a C property, right? But these D-type properties are risky investments. Why are they risky investments? Because a lot of times they're war zones. There's a lot of violence. There's a lot of crime. There's a lot of aggravation as an investor, right? Because now not only are you talking about dealing with the investment, you're now dealing with the people element, the people issues that this type of investment attracts. Brian, did you have anything you wanted to add to this?
Two things. So, when you start to think about these older properties, right? You start to get to an area where some of them might be ticking time bombs, right? So what I mean by that is they could have systems or large major pieces of the asset that are getting really aged and are approaching an age where they're just going to start to crumble away. If you've got roofs that haven't been touched in 30 years or so, right? I mean, you could have some really structurally unsound properties in these C and Ds. So that's a huge part of the analysis, is making sure when you're buying these properties, ideally they shouldn't have any time bombs in them, or you should be paying a price that recognizes those time bombs, right? And then I want to highlight what Oliver said about, you take a Class C and you renovate it into a Class B like state, right? Because you do that, and then we start to talk about that cap rate compression, right, from our previous lesson, and you get a cap rate compression from a C to a B of about 1%, and that can be huge in terms of the value you get off of that property.
Totally agree. So there's four classes of properties. There's your Class A, your Class B, your Class C, and your Class D. Those are your four classes of multifamily properties. And these all fall under the residential multifamily and commercial multifamily. You can find these Class A, B, C, and D in each one of those residential or commercial multifamily.